Good evening to all our viewers from VC World. We have with us here today Dr. Ritu Verma, who is the co-founder and managing partner of Ankur Capital and is also the board observer of an extensive range of tech startups in India. After completing her MBA from INSEAD and PhD from University of Pennsylvania, Dr. Verma spent several years at Unilever and Philips. We'd be conducting this interview today from VC World, which is the venture capital community of BW Businessworld. A very warm welcome to you, Dr. Ritu Verma. We're really happy to have you with us here today.
Thank you, Anisha. Delighted to be here.
So we'll be starting with the first question, which is focused on your academic and apprenticeship years during your university years. So in your early years of your career, you were working as a physicist after completing your academics in PhD from the University of Pennsylvania. What led you to pursue an MBA from INSEAD? And can you possibly tell us a little bit about your academic years while doing your MBA and PhD later?
Sure, happy to do that. So I was super interested in doing physics and doing a PhD in physics, but I realized through the course of that I was more interested in the applied aspects of it. And so hence that led me to a job which was at Unilever, looking at creating new products. So, applying whatever knowledge I had learned and all the other stuff I had to learn in order to sort of create new products, launch new products. In the course of that journey, I realized as a technical person that there's a lot more, and Unilever was a great place to sort of give you an exposure to say, go ahead, try it, see if the customer will buy it. And learned a hell of a lot hands-on about launching products in markets. From lab to market was pretty much my experience then. And that's what made me realize that, look, I should go get an MBA to put some structure to my on-ground learning that I had at Unilever. And that's why I went and did my MBA. But during the course of my MBA, I realized that, what I had really enjoyed at Unilever and what I had probably enjoyed forever, it was sort of trying into self-discovery, if I may call it that really the innovations and getting innovations to market was what I was really interested in. And, at a large place, at a large corporation, the risk appetite for doing that is limited because they've already got an established market, all of that. You take calculated risks. To take risks and big bets on disruptive tech was something that, was much harder for large corporations to sort of do. So post my MBA, I was anyway sort of interested in this. I did go join Philips, but really my heart lay in actually getting products to market and, looking at disruptive technologies for markets here.
So before starting out with Ankur Capital, you were also leading the advisory firm TrueWin in its India and APAC operations. So can you tell us a little bit about the areas of practices of the firm and possibly what led you to start out with TrueWin?
So as I said, I realized that, I started a job at Philips. Again, at Philips, it was about getting products to market. But I had realized by that point of time that larger corporations have limited risk appetite. So TrueWin was actually about going back to what I really wanted to do, which is about, working with investments into early stage technologies, getting them to market. So I worked with a bunch of CVCs in an advisory capacity, looking at technologies globally, started with India, but turned into looking at technologies globally. The mandates were quite broad, from what is called biotech to material tech kind of stuff. I ended up actually working quite a bit on battery technologies in those days, and that was a global focus because one of the CVCs was interested in that. And looking at companies today are actually pretty big companies here. So that's what I did at Truman.
And which year was this when you started out with Truman?
So I did this from about 2007 to about 2009. So about a couple of years is what I did there, and of which I quit doing that and actually moved back to India and realized that. And I had this experience at Truman working for one of the CVCs, that there was actually not that much disruptive tech that was happening in India at that point of time. And by disruptive tech, most of the CVCs were interested in IP-led deep tech. What today is called deep tech wasn't called deep tech at that point of time. But at the same time, there were a lot of very interesting and exciting business model innovations that were happening in India. And so I moved back in 2009, late 2009, early 2010, with a view to say, okay, look, I'm going to do something in India, and I wanted to be setting something up in India, and ended up working with a bunch of startups, meeting my partner Rama in the course of that, and that led to one thing led to another, and we ultimately set up Ankur Capital.
So at Truman, you were already focused on the advisory services of taking the product to the market. What led you to eventually start out with the venture capital firm?
Actually, at Truman, it was called advisory because Truman was not making the investments, but it was advising on investments, right, is what it was. So I was already, the corporate venture capital arms that I was working with were making investments. So it is much like today, Ankur Capital is a fund and there's an advisor. So I was working with the teams at these corporate venture capital houses on making investments. So it wasn't advising the startups, it was advising on investments. Yeah. So it was really linked, yeah.
And is the fund currently looking at any specific sectors for investment?
Yeah, no. So we are sector agnostic. We're deploying out of our second fund. The first fund deployed across 14 companies. And our thesis in that was to say that, again, technology, both software as well as deep tech, is creating new opportunities in the next billion. We ended up actually having a large exposure to agtech and food, a bunch of deep tech companies in it that we're super excited about. And that continues to remain the focus for our second fund. So we saw that play out well for us. So sectors, we're actually sector agnostic. We've done a lot of ag investments, so we will leverage that, and we already have a whole bunch of ag companies in our current portfolio. But we have invested already in other sectors and will continue to do so.
So as one of the leading venture capitalists from India, also as an individual who's been in the advisory sector, taking products to marketplace for such an extensive period of time, what would you say are the key factors that a venture capitalist seeks while investing in a startup?
So I think there are three critical things, and I'm going to speak about this from the lens where we sit at an early stage, right? So one is, I can't emphasize the team and the importance of the team, because at the end, it's the team that takes it through the journey. The second part about it is obviously the market and the size of the market that the venture is getting created in. And third is, I would say, what's innovative, what's disruptive, what are the modes, what's the business model here that is being approached, basically. So I think these three things are very critical, with an overweightage to the first one, because it's an early stage of the journey. And so you learn things, and the team has to be, nimble, agile, open to thinking about how to make things work, open to building an organization. So those, I would say, are the three things. Yeah.
You're currently also the board observer at AgriX Lab and BigHaat India. Can you tell us a little bit about the impact of technology in agricultural value chains in recent years? Like essentially, especially post the pandemic, also technology has a specific impact on supply chain management. So, can you talk to us?
So, look, agriculture is in India is more than a $450 billion industry, right? And had till date, and even till date, I would say it's the tip of the iceberg, right? Quite untouched by technology. And, there are lots of inefficiencies in these chains. It's very, very fragmented, both from the farming side to the supply chain part to get it to the last mile of the customer and all of that good stuff, right? So technology has a huge role to play, right? So in order for anybody to have visibility, to bring in efficiencies, to connect demand and supply, there's a huge role for technology to play. And that's kind of what has started in the process. The process has started, but long ways to go. And to sort of create the consolidations, to create the efficiencies that are much needed. And I seriously believe that the drivers for all of that is not just, the efficiency of it, right? I mean, we're going to have to be more efficient about food. We can't be wasting it. There's all these climate impacts, right? Demand is shifting. All of those things just drive the fact that this has to happen. And so the pandemic was an event, obviously, which none of us predicted, right? And led to social distancing and all of these good things. And when people get hit in, bad situations, the thing that stays is food, right? We all still have to eat at the end of the day. So this became much more important because food supply chains and, digitally being able to manage food supply chains. And, we all probably saw it as a customer. But if you take a look at the people who are the buyers, you take a look at the people who are the traders, they also had similar problems, right? So they also, had to sort of adopt technology and probably, and this definitely has accelerated, has accelerated the adoption of technology like it has in other areas. Yeah. The only thing I would say is that the higher tailwinds here is because it's an essential, and it's an essential that, the sector has woken up to say, look, these kind of things can happen and I adopt technology faster. So there are tailwinds for that. So that's how we see what's happening in ag and ag tech here. I'll give you an example, right? At a company, BigHaat, right? They sell agri inputs to farmers, small farmers, big farmers, all alike, but we have lots more small farmers. And, they were the savvy types that would sort of buy directly on there. That thing has shot through the roof in the pandemic. Right. So that's the initial supply chain. It's not the produce supply chain, right? But essentials that a farmer needs to be able to actually even grow. What he would do is walk to his local retail store, but during the pandemic, shot up buying online. Yeah. So this is the kind of behaviors that it has driven.
Would you say there are still certain specific roadblocks in the implementation of technology in these supply chains in India?
Yeah, definitely there are roadblocks, right? We see much higher adoption, but the thing that you still need adoption of a lot of other things, right? You need an adoption of payment systems, right? For it to be seamlessly and purely, truly digital, as opposed to still having cash collection needs and all of that good stuff, you need payment adoption, right? And one of the roadblocks is that some of these industries are not used to non-cash operations, and moving from cash to non-cash creates transparencies that perhaps some actors in the system don't want, right? So you have to, that's there, right? I mean, there's also an older generation, younger generation piece, right? The younger generation is quite happy to be on the tech digital. The older generation is kind of like, I've done this for my life. Like, how does it necessary, right? Yeah. So there is obviously a behavior adaptation kind of piece. So I don't think any of these are insurmountable, but I think that these are things that have to be navigated. And going back to my earlier comment, the pandemic has helped push some of this, because if you couldn't do business, then you're going to resort to things that are working, and you're not going to worry about these other things. In a normal situation, you're kind of like, oh, why should I do this? I'm doing fine. So those kind of behavior changes, obviously it pushes.
So I wanted to speak to you a little bit about the advancement of fintech companies in India, and possibly the kind of growth that we are expecting to see from the fintech sector in India. Like, we know a few fintech companies currently are also filing for IPO in the country. So just wanting to understand from your point of view, possibly what kind of growth are we expecting to see from this sector?
So again, there's a long way to sort of go. So there is a lot of room for growth. And, from where we sit, it's again, fintech has unlocked, like, let's say, larger transactions, right? Some of the stuff that we're doing, right? But the opportunity lies in the smaller transactions, which are much more costly here, right? So I think that penetration has started. There's good inroads that have been made. But of course, there is still large opportunity there. So I'm very bullish. We see fintech. We see very interesting companies. We're invested in one called Rupify, where they're looking at providing small ticket, fast moving working capital loans, right, to small businesses, right, and unlocking credit. Payments has made huge headway, right? Payments, we all know that from whether it's Razorpay or GPay or Paytm or whatever, and UPI, let's not forget that, right, has made huge headways, right? But as you go deeper into fintech, and you start looking at about credit, you start looking at insurance, you start looking at other products that are also necessary, they're still at the top crane here. So the opportunity, actually, what is really exciting to us is what lies in the mass market, where your small ticket loans, easy collection mechanisms for it, insurance products, all of those things, which have to be rejigged, right? They have to be rejigged to make sense for those set of customers. And that, we think, is a very, very exciting opportunity. And Rupify is an investment in that area of saying, how do I do fast-moving working capital loans online, right? Because the cost of offline is so high, right? That's just not. The thing that we also see is that, especially when you looked at, companies that are sort of going very deep into what we call the next billion, they become full stack is what happens. So once I have a customer, I want to be able to offer many things to the customers. So, and as I get to know my customer better, you mentioned BigHaat, for example, right? They know their farmers, right? They know exactly what their farmers are doing season on season, here and then. It makes complete sense to also be the financier, right? To provide the financial products that are necessary for the trade of the business that is kind of happening. So not just them, across the board, we see a lot of companies actually adding fintech to their existing businesses, because it just makes sense to do that. So there will be fintech alone companies, and there will be fintech as part of full stack companies that we will see happen here.
So I want to ask one more sector-focused questions before we move back to your professional career. So a lot of the offline educational institutes adapted to digital infrastructure, digital solutions, especially post the pandemic. And we'd say the technology has been the backbone for supporting the implementation of education in India. So what are your thoughts on the growth of edtech in the country in the upcoming years? Would we see certain changes in the post-pandemic market? Can you give us a sense of that?
I think edtech is here to stay, right? And there is no doubt that technology-enabled education has value in a student's life, small, big, whatever, exams, whatever it might be. I think the question really in our minds is that the balance probably settles somewhere else, right? I think what's been fairly clear from the pandemic times is that, in certain areas, pure digital online works really well, and that's great. But in other areas, no, especially little kids and things like that, there's some bit of it that will continue to be, right? There's no need for all of that to be necessarily physical, but there is a need for the physical as well. So I believe that this is going to all become hybrid here. Technology is going to become a much, much larger part of education than it was pre-pandemic, but it's not going to be the only mode of delivery. It is going to be tied in with, it's going to be the phygital, as you say, because, you can submit homeworks online, you can do auto corrections, you can do all of those type of things. But there is an element of the education that, I think a lot of people, we are seeing a learning deficit during this time, right? And technology has been amazing to be able to keep things up. But given a completely normal situation, I think technology will scale back a bit and the physical will come, the physical will come back in there.
Any specific model within the edtech sector which you think would be growing at a further accelerated rate? Maybe online distance learning or school education?
So I think it's school learning actually, right? So I think it's school learning. I think that school probably had the least digital stuff happening in it pre-pandemic. And, you always had the test preps and, all of that online happening. But I think schools themselves were very resistant to the tech, right? So adoption was sort of low. I think you've already have, right? You've already seen that it's it's a matter of survival. So they've had to adopt stuff and they'll keep some of that. Some of it is really good, right? And they will keep that, right? There are things that they can do with digital, which they couldn't do in a classroom. So I think that's a very exciting area. And you've got to figure out and pick the things that will stay and grow because they're bringing value to the education system. Yeah. Another area is sort of, let's take the tuition market here, right? I'm sure there are lots of parents shuttling their kids from this place to that place to whatever, right? A nightmare. Why, right? At some level, that online has sort of been working. So, again, I think you'll see some of that stay because it's just convenient. It just does the same job without you having to, actually deal with the complexity of physical movement. It also unlocks markets, I feel, and that essentially it unlocks markets. For example, tutors in other cities could be teaching in another city, students can be learning, though there are no tutors or teachers near them. So I think it unlocks markets and makes markets bigger for both parties here. And I think those are the interesting themes here that we are seeing being unlocked and will continue to get unlocked.
Thank you so much for the response. Our next question would be on the surge of foreign direct investment in India. And as we know, in the financial year of 2020-2021, we've received one of the highest amounts of FDI experienced in the history of history of India, which was nearly 82 billion. So can you tell us possibly what kind of impact this can have on the Indian venture capital landscape? Any thoughts?
We're already seeing the impact of that, right? You're seeing the impact of the fact that, there is cash flush in this ecosystem. So it's a great time to be an entrepreneur. There is a lot of cash sitting, dry powder sitting with funds, and funds are looking to deploy. So if you'd asked anybody, in, let's say, February 2020, what would happen if a pandemic came around and shut things down. They'd be like, oh my God, that would dry up capital. That's not what happened. It actually is the reverse. As you said, $82 billion flew in, right? And primarily because those markets have depressed interest rates. So they're like, okay, let's find somewhere for this money to go, because what's the point of this 1% or whatever that I'm going to get in my own market? And so there was cash aflush, and there were investments galore that happened, right? So I think that the foreign money coming in here will stay as long as their markets remain depressed. The place you will see a flight is when the opportunities get better on the other side. So right now they're still depressed. So the money is still flowing. So as an entrepreneur, I would go out and raise money.
So you're essentially saying that now is a great time to start up for entrepreneurs because there's a lot of cash flow.
It is. There's a lot of cash. People are investing. People, are, happy. Ticket sizes of investments have moved, right? I think if you have a great idea and you're a great entrepreneur, I think raising capital today is actually not really a hard thing. There's a variety of investors in the market. It's no longer, here's 5 and let's knock those doors. There is a broad sense. There are investors from outside not even having shop in India ready to sort of invest. So I think it's a great time to be an entrepreneur. Right? I'm not saying that you don't have to build a crappy company. I'm saying that you have to still work at it. But I wouldn't say that cash is the challenge today.
Any specific trends you think would emerge in the post-pandemic market? If possibly, maybe you could talk to us about any 2 trends you think would emerge in the post-pandemic market.
Very broad. Obviously the one trend that everybody is sort of talking about is digital, right? And digital has already emerged and will continue to sort of emerge. And I think that's a train that has left the station and will keep going. So that I think that there is sort of no doubt about it, right? I think what I'm super excited about, and I'm not sure this has anything to do with the pandemic though, but it has happened during pandemic years, is, you talked about the cash that has come into India, right? And we're also seeing all these IPOs. We're seeing the maturity of the Indian startup ecosystem happening, despite headwinds of a pandemic and whatever economic impacts, etc., that it might be having. So what I feel bullish about is that, this, it reduces risks, right? So there should be more cash that comes in, saying, here's a market. You'd hear people say, oh, India market hasn't performed and, all of that. But you are seeing the performance happen today, despite the current situation. And I think is a positive that fuels more investors, that fuels more entrepreneurs, more importantly, because they see the fact that this journey is sort of there and there to be had, even at difficult times. So that I think is something that I find interesting. We'll see how it pans out, but I do hope that for the Indian ecosystem, there is much more of this to come.
So you've, of course, very extensively been in the advisory sector for several years. Now you're an established venture capitalist in India, also the board observer of an extensive range of startups. So what's next possibly for Dr. Ritu Verma? Can you talk to us a little bit about that?
So I think we are on a start of a journey in Ankur Capital, right? We are a startup. Yes, we run some funds. I think there's a lot of innovation to be done in the financing ecosystem for startups. And as we see more maturity happening, as we see a variety of different types of companies getting built, I think the financial instruments here the type of funding that's available. Venture capital is one type of funding, right? There are other types of companies that are very good businesses, can give you very good returns, but aren't really necessarily backable by venture capital, right? So we see Ankur Capital broadening in terms of building out other products here. We see opportunities in certain sectors that weren't quite there in the past, so building out and maybe focused funds to actually be much more targeted at specific kind of sectors here, if I may say that. So these are things that are there on the plate going forward of sort of actually expanding and growing Ankur to do a lot more stuff.
So my final question to you would be that a lot of our young readers who are entrepreneurs, viewers who are entrepreneurs, and young professionals who could be who watching this video, what would be your message for them?
Please think of starting up. I mean, it's such an exciting time. You've got a blank slate in front of you, right? There are so many problems to be attacked and solved. In the past, those problems still existed, but the pathways, the fuel for it didn't exist. So the battle was tough as hell, right? The battle is still tough as hell, don't get me wrong, right? But if you're even inclined to be the creator, the builder, this is a good time. This is a good time to do that. So, the opportunities are large. If you have the dreams and the wherewithal to sort of go do this, I would encourage more people to try handed entrepreneurship.
Thank you so much, Dr. Verma, for giving us this interview. I'm sure our viewers are going to find it very insightful and engaging as well. And we look forward to having you back with us here on VC World again.
Thank you, Anisha. Complete pleasure to talk to you and look forward to chatting again.